Hello, marijuana stock traders and investors. Charting Man Dan of thechartguys.com here, talking in this video about some of the differences between the Canadian MJ space and the US MJ space. There's a lot of back and forth on Twitter with people arguing, who's better positioned to benefit when the US legal landscape changes, who's better positioned to benefit in Europe, who's going to be the bigger companies. Essentially, where is the best opportunity to put our money? There's a lot of different factors in play for answering that question. We're going to look at some of those. And my superpower as a trader, trading marijuana stocks over the last decade, I don't care at all which company is going to be the best. All I care about is making money. So I have no emotional attachments to any of these individual companies. I know a lot of you do. You have your favorite companies, and that is fine. But if you have a favorite company and you're looking to marry a company or a person, you want to know every single thing wrong with it. You should be there with a fine-tooth comb on a daily basis, not defending your company, welcoming all criticisms, looking into all criticisms, researching them, and being okay with those criticisms to, again, put your hard-earned money into these companies. So I'm going to be looking more at the technical aspect and the trading aspect of things. And there's a lot of people out there that are better suited for looking at the specifics of the fundamentals as far as balance sheets and things. But again, the takeaway from this video is, where is the most opportunity over the next couple of years as the continuing US landscape continues to change? Let's look into where that opportunity lies. So before we get into it, there's a ton of companies on both sides of the border. I'm obviously not going to be able to cover all of them. If it's not covered in this video, it doesn't mean it's a bad company. I'm just looking at the names that I am most comfortable with, that I've traded the most often, and that I've been following for years and years. So for example, IIPR and GRWG are not in this video, but they are both very strong names coming off their all-time highs and in strong uptrends. So I'm looking at the names that I am most comfortable in. Let's set the stage a little bit about the market environment that we're currently in. The S&P 500 here, it's February 2021. The S&P 500 has been in beast mode for the bulls with just euphoria all over the place. And that is as bullish a market environment that you can be trading in. We know when Canadian MJ had its euphoria run, back when it was legalizing, the S&P 500 was at all-time highs then as well. Then, of course, during March, when the market dumped, everything dumped with it. It didn't matter that, these dispensaries were staying open and that these companies were being labeled as essential businesses. Everything got thrown out. The baby got thrown out with the bathwater. And then once that fear subsided, the buying started again. So we are in a very confident phase of the market cycle. If that changes, it will definitely change the perspective of traders and investors in this sector. That being said, everything is sunshine and rainbows right now, and when that is the case, people are much more willy-nilly with their money and tossing it around at anything that moves, essentially, is where we're at with this market right now. So that sets the stage. We also have a lot of forward-looking anticipation as far as fundamentals in the US. We're looking at the changing administration with Biden coming in. He's talked about rescheduling. If we get removal from Schedule 1, we then have opening up for the banks and for these companies to have better tax structures and for access to banking and better terms for loans. And we're also going to be looking at the potential to uplist. Right now, the biggest differentiator between Canadian and USMJ from a trading and from a markets perspective is the fact that the Canadian names are trading on the NYSE and the NASDAQ. And again, some names in the US are, but not the multi-state operators. So we're going to be focusing on multi-state operators who have the uplisting as a future catalyst to be looking towards. And again, a lot of things get priced in. So it doesn't mean that once we uplist, we're going to explode. It just means that the fact that we have not uplisted keeps a lot of people holding on. And we know that there's a lot of big money that is not yet playing in these names on the OTC, which is the penny stocks, the pink sheets. They're not trading in these names, and they will when they uplist. So again, just me as a specific example, I am one individual, but I will trade hundreds of thousands of dollars in APHA or CGC on any given day. I'll day trade them just today. I shorted CGC, and I did it 5 different times. So I racked up a decent amount of dollar volume trading CGC today. And I do not do that with the USMJ names because they're on the OTC. The volume, the liquidity, and the opportunity is not the same. I'm a day trader. I want to be in and out quick. I want to be able to use market orders without a ton of slippage. And again, it's just not the same. So my dollar volume on a daily basis goes to those Canadian names. It doesn't mean that I think CGC and APHA are going to be able to capitalize on the legal US market more than the OTC names. It has everything to do with the exchange that they are trading on. And in my opinion, I am one person of many, many, many where that is the case. And in my opinion, when we see these names all uplist, which will have to be done with some kind of legislation change, whether it's, some kind of banking bill coming through the House and the Senate. But when that change happens, I do believe dollar volume will decrease in the Canadian MJ names and dollar volume will increase in the USMJ names. So just as an example, I'm looking at live trading right now. The market's not closed. We've got 5 million shares of CGC traded today, which means roughly, we'll say $200 million traded in CGC today. And then I look at one of the major names, CRLBF, and we're trading $17 million. Less than 10% of the total dollar volume. So again, that is going to do this, in my opinion. When we uplist, more on the US side, less on the Canadian side, and they're going to balance each other out a little bit. So that is a catalyst that we are looking towards, and I'm looking forward to it because I know, without a doubt, that I will be trading way more dollar volume in these USMJ names when that opportunity arises. It was the same thing in Canada. When these Canadian names, before they uplisted, I was sitting there just waiting. Please give me this volatility, give me this volume, and they did. And it was a gift, and I've been trading these names very actively for years, and it's been wonderful. So I believe that the focus will shift more from these Canadian MJ names, which are seeing bigger percentage moves. Why are they popping more? They're popping more, and they're seeing these crazy moves. Again, here's CGC on my screen right now because of where they are traded and the dollar volume. You can't just throw $10 million into an OTC listed name without very significantly impacting the price, whereas throwing $10 million into CGC throughout a day is a much different story. So you see a move like this on CGC where we go up 72% in a span of just a couple weeks from the end of January into the start of February. And if I were going to be looking at, again, CRLBF, end of January into February, that same kind of move is 42%. It's not as significant. Again, that has nothing to do, in my opinion, with these names being better companies. It has to do with the access of capital that we have in these markets on these different exchanges. So as far as, who's going to be the winner, I'm not here to pick winners, and I never will. I'm not going to ever fall in love with any of these names. I am short-term day trading them always, and swing trading, but it's always about who's going to give me the biggest return and who's going to give me profit, because that is the only thing I care about. I don't care about which company is going to win. Yes, there's a European market. Yes, there's a lot of people in Europe, and perhaps the Canadian MJ names will be better suited to capitalize on those markets. In my opinion, that's going to be a much slower road than even the very slow road that the US market has been. We know politics are extremely slow. We are patiently waiting for these changes with the Biden administration, and we're going to be waiting for a bit longer, in my opinion. So I think that there is the short-term opportunity is in these US OTC names, and when they uplist, that opportunity will drop a bit, in my opinion, because that's one less catalyst that we're looking towards, and that's one less reason that people are going to be trying to get in, before big money does. So until the uplisting takes place, I am favoring USMJ names, not necessarily to make the most in the short term as far as percentages, because again, I know if there's a news headline that drops, and let's say just a news headline, we're getting a vote in the Senate on this bill, which has the possibility to open banking and for us to uplist, whether it's the SAFE Act, whatever. Let's just say that headline drops right now. The Canadian MJ names on the NYSE and the NASDAQ will see bigger percentage gains, and I see it time and time again. I stare at the screen every day, day trading, and you'll see a morning where the Canadian MJ names will rocket up 8%, 12%, 15%, and they go up real fast and real hard. And the USMJ name, I call it the rabbit and the tortoise, because the USMJ name will just very slowly track behind it, and it won't see the same percentage move, but it does act as a laggard, and there is some opportunity where if you miss the Canadian MJ move, you can get that USMJ laggard move. But again, as long as they are on the NASDAQ and NYSE, they are better positioned for fast influxes of capital, for short squeezes, and that will be the biggest change when USMJ uplists. So let's look at some charts. Right now, the way that I compartmentalize my brain and keeping track of this sector is obviously Canada, US, but we can break it down now further into technical setups where Canada, there's two very clear different technical setups. I have a name like CGC, so we ran hard on all these names. We climaxed, topped out. I put out that TLRY video that had very good timing as far as nailing the top and the 50% pullback, but that marked the top for the sector, and the pullback in the sector, as we were just way too euphoric, ran up way too fast, too hard, and when that happens, you usually drop real fast and hard as well. So what I am watching is the price action from that top, because everybody ran up hard and everybody dropped hard, but how we are responding to that drop is different. Some names like CGC hit a low and then they daily bear flagged. They had a weak bounce attempt and they broke the low of February 12th. That's a differentiator right there. Look at ACB. Same thing. We hit a low of February 12th. We broke that low. TLRY, same thing. Hit the low, broke the low of February 12th. Those three names are on the weaker side because they broke the low of February 12th. VFF, APHA, and CRON are on this side of things because they are holding that low. And this is a daily higher low trying to form right now, which is very different. Rather than a lower low, we're looking for a higher low. So APHA, February 12th low of $15, we're over 10% above that level. This is VFF actually, over 10% above that level. APHA, that low was down at 1456. We are 30% above that level. And CRON, not nearly as much, but we are 10% above that level. Daily inside bars. So right then and there, weaker side, stronger side. We are paying attention to the arbitrage between the TLRY and APHA deal. Again, I talked about that in the TLRY video that I put out. I guess I put that out maybe February 10th, maybe the 9th. I forget exactly. But I talked about that arbitrage and essentially what happened because that arbitrage gap was so huge, we saw TLRY drop harder than APHA. So that gap shrunk a bit, and now we're seeing APHA bounce stronger than TLRY, and that gap is shrinking even more. So in my opinion, as I talked about in that previous video, the short squeeze that was going on was just setting up a massive arbitrage play, and now that that's shrinking, it's essentially what's going on. So I've had a mindset of if I'm looking bearish, I'm looking bearish VFF. If I'm looking bullish, I'm looking bullish APHA in the sector since that top has been hit. As far as what we're looking at into next week, let's look real short term, and then we'll zoom out a little bit. So real short term, if these inside bars from today can break bullish, APHA inside bar, CRON inside bar, VFF inside bar, if they break bullish on Monday, our new daily higher low has been set, and it will be the low of Thursday here, February 18th. And again, that's just setting these higher lows and keeping the uptrend intact. If they do break bullish, the most important resistance is the high of February 16th. Well, it's the high of the bounce. It's on different days for different tickers. So for APHA, the most important resistance would be 2268. For CRON, the most important resistance, 1347. And for VFF, 1878. So automatically, if I am looking bullish, I'm looking at the names that are holding their low of February 12th. If we zoom out on the weaker names, they are still looking for weekly higher lows. They are in weekly uptrends. So again, it's just a short-term differentiator between these names over the last week. And we will be watching CGC for a weekly higher low. I like the weekly EMA 12 support as a visual guide on all time frames. We can see the last consolidation low hit that red line there. And then we saw continuation. And again, this EMA 12 will be in the $34 range this coming week. And we'll be watching that level, if it comes into play, to be watching for a weekly higher low. So weekly higher lows on tap for everybody, even the names that are slightly weaker. And it would require losing the weekly higher lows if we were going to see any major red flags in these sectors. But again, as far as going back to levels that we recently came from, I don't think we're going to be seeing CGC up at 56.50 anytime soon. That's a long ways away, and that's 48% away. And once you see that massive bull move take place and you clear out the order book on the way up, now there's a bunch of bag holders that have been created. Anybody that bought CGC between January 28th and essentially February 11th is in the red right now if they did not sell. So working your way back up to those levels, you have a new round of bag holders that you have to get through, which is just adding selling pressure. It just adds supply of shares, which was obviously very limited on this run up. One very important note, which I forgot to mention, Canadian MJ has had earnings come out, and that was part of this euphoria move that we saw leading into those earnings and in response to those earnings. USMJ has earnings in March. That's now what we're looking towards. And the last time we had earnings in the sector, and it's happened multiple times, we go real strong into earnings. The earnings are great, but everybody knows the earnings are going to be great. And so we sell off a little bit afterwards. No red flags on the sell-off. It's just healthy consolidation, but it's not the same bullish surge up because the market is not surprised by the bullish earnings. They are anticipated. So generally, the run-up takes place into those earnings. So those are the Canadian MJ names and the technical setups that we're looking at in the short term. Again, I favor the names that are holding the lows of February 12th. And if any of these favorable names break the low of February 12th, they get booted right back to the weaker group. I don't care what name it is. And again, that is my superpower as a trader, not caring. No emotional attachment. I cannot tell you how valuable that is to have as a trait, a personality trait. So now let's go to the USMJ names. So what I would love to see is, number one, the S&P 500 needs to stay strong. Let's look at SPY real quick because there's a key level to be watching, and it's the double bottom daily higher low support of 387.50. We held it yesterday. We're not seeing a ton of strength off of that level. If this level breaks, for me, it's just an automatic cautionary red flag for any sector, USMJ included. Doesn't mean we're going to dump. It just means we are shifting the mindset and we're shifting the market environment a little bit, which means we can dip further. We can see further weekly consolidation in both Canadian and USMJ if SPY breaks 387.50. If SPY holds 387.50 for the next couple weeks, the bulls keep complete control, nothing to worry about. So that's a key benchmark level for me to be watching. So MSOS, my throat's killing me, but we're going to keep trucking through. And I'll give full disclosure right now. I do own some. I did nibble back on some MSOS today. I sold on the way up because I was feeling euphoric and my account was looking great. I sold early. I sold at 49.50 and didn't chase as it kept running. Definitely left some money on the table, but now I'm scaling back in on consolidation and I've got lots of cash to do that scaling in. So that's just my style. Again, I'm all shorter term mindset with my trading. And if you are investing or swing trading, you're going to be looking at things a bit different. And there's nothing wrong with that. We're just different people. So for MSOS, we confirmed a daily downtrend. We hit our all-time high. We hit our low of the pullback, lower high, and lower low. That is notable. What else is notable is none of the major MSOs, our big four, and we're going to have to call them big five. We'll talk about that in just a second. But our big four all held support. So it's a notable difference between the ETF and these individual names. A bear trend confirming on the daily with zero follow through, which is where we stand at the moment with a solid green day back at the high of yesterday, means zoom out and scout for a bull flag. This could be a weekly bull flag, absolutely. Ideal scenario for me as a bull, I want to see SPY hold 387.50, and I want to see the bulls buy the dip into earnings. I want to see new all-time highs in early March leading up into earnings. We may see profit taking after earnings, but I want that run up and more all-time highs. That would be nice. So the bear break with a lack of follow through is why I started nibbling back, rebuying into my position in MSOS. The big four that have been trading for a long time are all very, very similar now. We've had a lot of shifting around, some names stronger. TrueLeave was the lead bull for a long time, and really back a year ago it was showing us it was a lead bull. There's a catalyst on TrueLeave where if we don't see countrywide legalization in the US, we know Florida is going to be coming online eventually. Probably the next time they vote, we'll have legalized Florida recreational. Huge market. Their target market, and they have a stronghold of dominance in Florida, is going to balloon. And then you got all the travelers and the vacationers. So it wouldn't be necessarily a bad thing if we saw states allowed to do their own thing, no, countrywide legalization, and then we get Florida coming online as far as what that would do to TrueLeave as an individual stock. But aside from that, they're all very similar right now. Since topping out on February 10th, and again, there's correlations between these sectors. As much as you want to be all USMJ and forget the Canadian MJ names, you can't, because TrueLeave marked the top in USMJ names on February 10th. There's no two ways about it. That is what happened. So there are correlations that we have to pay attention to. So all of our names are holding this same range. We hit our high of February 10th. We pulled back and set a daily high or low. And we're now just tightening up. So high, low, little lower high, holding the base of support, just sideways essentially. And again, if we break this support, which on CRLBF right now is 1590, the best case scenario for bulls is zero bear follow through, which again would mean, okay, maybe it's a weekly bull flag and just another high or low. Keep it simple. CRLBF has been holding weekly EMA 12 support, this red line, for 4 months. If that level is lost, it is a red flag for a shifting market environment. If that level is holding, the uptrend is intact. It keeps it a nice and simple guide. So we have a tightening range to be watching, and if that support level holds at 1590, just like SPY 387.50, we know the bulls keep their complete control if 1590 support is holding. Here's TrueLeave TCNNF. Again, top February 10th, pulled back and set a higher low, and now just sideways. Key support is 4610. If it breaks, it's a short-term red flag, but if it breaks with no bear follow-through, it means a potential weekly bull flag. Another thing to note, you look at the Canadian MJ names traded on the NASDAQ and the NYSE, they see big-time bull moves up, absolutely, but the drop was massive. And these USMJ names, while they did not see the same kind of a move up, they did not drop nearly as hard. So if you're looking for a long-term hold in your portfolio, this is definitely a lot less stress and euphoria inducing. It's a slow and steady bull move up. And nobody that's been holding these names over the last 6 months has been complaining at how this trend has been going. So again, if we get the bear break of 4610, a red flag for me would be increased bear volume and follow through. If we were to get that, I would be patiently waiting for weekly EMA 12 support to come into play, and I would be saving cash for down at those levels. If we get the bear break with no increased bear volume, with a lack of follow through, that's when I'm a little bit more aggressive with my scaling back in. GTBIF, same thing, bit of a stronger day today. So again, high February 10th, low of the pullback, 34.55, and that 34.55 level is key short-term support. Everything that I'm saying on these names applies to everybody. Again, look at the weekly EMA 12. Just a great visual guide for everybody in the sector on the US side of things. And if we break bearish, plenty of space for a weekly high or low to maintain uptrends. We will eventually lose weekly uptrends in this sector. And when we do, we zoom out and we look for a monthly high or low. Just as an example, Green Thumb has not seen monthly consolidation since 1160. We have seen a 200% move since that has happened. We will see monthly consolidation. We will pull back 20, 30% off of our highs at some point. I have no idea when. And it's going to feel like, uh-oh, was that our top and we're about to go into a bear market? the monthly higher low is going to be key. We are our strongest when we are in monthly, weekly, and daily uptrends. That's the environment that we are in. Canadian MJ is coming from monthly, weekly, and daily downtrends long ago, and they recently changed their monthly trends bullish, and like that, it was a sentiment shift, and people that were holding bags for years wake up and suddenly, they're back to break even or back in profit. So those monthly trends are important to be paying attention to on the longer term time frames. So GTBIF, key short term 34.55, and again, if we break bearish, we just do not want to see increasing bear volume, because that's when we get follow through on bear breaks. We want to see bear breaks with a lack of volume and a lack of follow through. CRLBF, same thing. Support here, 14.88, tightening sideways range. And the reason I'm not aggressively scaling in to these names just yet is the potential that we could see a little bit more downside. And in my opinion, SPY is going to dictate whether that happens or not. If SPY holds 387.50, probabilities that these names hold their daily support will remain high. And if SPY breaks 387.50 support, odds that we break these daily supports on these names will be high. And again, this just comes from staring at the screen many hours and watching correlations. And SPY is a huge factor, even though we're not traded on the NASDAQ and NYSE, and correlations matter more with SPY for names that are uplisted. They still matter on the OTC. TRSSF. So now we're going to honorable mention. Let's go to Verano first. So this is a recent IPO. Started trading in Canada 3 days ago, and it's the new kid on the block. So I'm watching this name, and I just bought some today because it just started trading on the OTC, and I'm in the US, so that makes buying a bit easier and a bit less of a headache. But I like it because it's the new shiny object, and we're right at all-time highs. So I know that a blue sky environment is very favorable for the bulls, and I also know that right now the MSOS ETF holdings of Verano are 0.8%. Everybody else of the major four, we're looking at 7 to 10% of the MSO ETF. So that tells me we are likely going to see MSOS, the ETF, buy and increase their position probably 400 or 500%. And that may mean that the holdings of the other names drop a percent or two to let this new kid on the block in, but it is the third largest market cap behind Curaleaf, and I believe it's behind Green Thumb. Again, double check all the fundamental information, but it is nestled right in the middle of the major four, and it is now a major five as far as market cap and major players in the USMJ space. So that is something that we're going to be keeping a close eye on, and we need a lot more price action before technical analysis is going to be beneficial to us. But we know the all-time high of 33 is right here. And again, the potential short-term catalyst if we see MSOS start buying some more to increase their holdings, as I believe we will see. Honorable mentions of TRSSF, and a little bit of a different shape. New daily support here is 1330, much more volatile in both directions, but a very strong uptrend overall as well. And CXXIF, same thing. Trying to set a daily high or low. Big bull volume, no bear volume, no red flags. Essentially, they're just leveraged versions of the major names. The percentage moves in both directions are more magnified. They have roughly the same correlations, but they are wilder animals as far as that volatility. So it all depends on what your risk or reward is. So the question, long story short, where is it better to put your money? You have to answer these questions for yourself. Are you in a short-term mindset? Are you looking 5 years out? There's nothing wrong with diversification. You can have some money in Canadian MJ and USMJ. Again, there's no reason to have to choose favorites that you fall in love with and hate everything else and not listen to anything. The number one mistake I see traders and investors make is they fall in love, they become emotional, and then they put the blinders on. Fall in love, but for the love of God, keep your wits about you and scrutinize your company. It has to earn your hard-earned money. Make them prove it to you. find everything wrong with that company. When I first started trading in the MJ space in 2010, it was the Wild West penny stocks. I was looking into the background of every single officer on the board of directors and the CEO. I want to know what that CEO was doing 10 years ago. I looked into the history of everything. I wanted to know every single red flag that I could possibly find. And if I'm in USMJ here and I love the MSOs and I've written off CGC, if something changes and if there's a law that changes and CEGC comes in storming, through the north and starts dishing cash out and we see more cash infusions, change your mindset. Do not stay ingrained in your stubborn mindset or it will cost you money. My throat is killing me. Hope it was helpful. Feel free to ask any questions. I love the YouTube comments and discussion and different perspectives. And keep an open mind and do not become emotionally attached to any of these companies. Have a great rest of your weekend. We'll see you soon.